What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at DraftKings, ticker symbol DKNG, on a variety of time frames in anticipation of tomorrow's trading day, Tuesday, January 30th. Well, DraftKings here today, continuing its long-standing uptrend. Let's take a look at a variety of time frames here, starting with the 1-minute chart. We saw this big old pump off the open and big fade. As far as quality intraday, let's say like scalp setups on DraftKings here today, not a lot that's clean that's standing out to me. So let's move on to the 5-minute for more context behind the volume behind these moves. By the way, hey, listen, guys, if you have just a second, I'd really appreciate popping down to the comment section. Let me know what stocks, even if it's just DraftKings, you'd like to see covered here on the channel in the future. I'll read every single comment I get as of right now on the channel, and I'll take every recommendation into consideration. I appreciate it. Now, granted, these moves, they were whippy, they were volatile. It cleaned up a lot in the second 3 quarters of the day. But let's look at actual volume. Now listen, it's not uncommon to see really high volume immediately off the open. But what I think is the most interesting here is we saw this slightly higher than average volume candle right off the open, but that second 5-minute candle had over 1.6 million shares traded in a 5-minute candle. As the stock continued to push higher, now a big part of that, at least if you ask me, is the fact that DraftKings at that very moment was trying to get above that psychological level of $40 a share. And you had a lot of bulls and a lot of bears fighting each other, and that, of course, contributed to that massive candle. Now, this big pullback we saw kind of like early to mid-morning, we saw kind of fading volume there, okay? Not massive volume really at all. Of course it is if you compare to yesterday. Today's a totally different ballgame, though. More volatility. These 2 bottoming candles here, well, really there's one, and this following candle after that, pumped up the volume yet again, and the bulls, of course, won both of those candles. Now, the reason I bring this up even at all, and you can see we continue to run here above $40 a share in the after hours. First of all, the reason I bring this up at all is because when we're looking at moves that are in our favor, we want moves with as high volume as possible. That gives us the biggest possible sample size to go off of. And when moves are against our existing sentiment, our existing bias, the lower the volume, the better. We want the smallest sample size possible, winning that bet against our positioning. Now, as far as the after hours movement is concerned, breaking 40 and holding it in the after hours, listen, if you're a bull, is that a bad thing to see? Absolutely not. That's a wonderful thing to see, but understand that after hours movement tends to be much lower volume, much different volatility than regular market hour volatility. The volume is very low. We have to take it with a grain of salt, whether it's in our favor, confirming our bias, or going against us. Take it with a grain of salt when it's easy, and especially when it's hard to do so. Now let's move on here to the 30-minute chart on DraftKings. Start getting some context as far as really heavily watched psychological self-fulfilling prophecy levels are concerned. Here on the 30-minute, this is just one of the time frames that I'm paying attention to. We'll go through the others here shortly. We have that 200 period right around 38.44, and the 50, that 200 period moving average, by the way, is that gray line, and then the 50 period moving average is the white line, sitting at 38.97. Now, the 30-minute compared to the 4-hour and the daily, these are, of course, going to move the quickest. But when we make big moves to the upside, I'm always looking for these to get yanked up, sucked up to the current price level as quickly as possible if I'm bullish. If I'm bearish on a name, right, we have to give both sides. I know it sucks. I know it's tough sometimes to hear. But if I'm bearish on a name, I want those to stay as low as possible because they can act as potential safety nets. If I'm a bull, I want that safety net up above 40, right? Obviously, to try to help hold that $40 psychological level with an additional level or 2, if we can get that going on a variety of time frames. But if I'm a bear, I want a big old gap to the downside. So consider the psychology on both sides here. Let's now look at the 4-hour. You can see here the 200 period on the 4-hour essentially flat going back weeks now. The 50 period is getting yanked upside, currently sitting though down around 37.30. Just understand that there's about, a 3-point gap on the 4-hour chart between where the stock price currently is and that next self-fulfilling prophecy, heavily watched moving average, which is the 50 period. Now, keep in mind though, here on DraftKings, 38.40, 38.50, that region was a heavily traded technical region. Of course, not really a psychological region, but when you form a technical region, it then turns into a psychological region, and vice versa, by the way. So looking ahead here, let's go to the daily chart and then lay out my real bullish and real bearish potential scenarios as we head into tomorrow. Listen, $40 a share. Now, granted, this is the daily chart, so it's only going to show us the close. Remember, the stock is, up in the 40s as of right now. From a bullish perspective, $40 a share. There's one thing on your mind if you're a bull right now, I think, for most bulls psychologically. $40 a share, we want to see hold. Okay, I don't mind if it back tests and bounces off that level 3, 4, 5 times. I don't care. I don't care if it takes 4 days and we test it every single day and barely bounce. I don't care. Hold $40 a share. Does that mean if it dips to $39.90, all of a sudden everything's broken? No, context, right? Understand that when we're zoomed out on the daily chart, things take longer to confirm. I'm just looking for tomorrow, maybe the next day, to hold 40. Even if we test it hard, just hold that level. If we pull away from here, that's fine. Honestly, ideally, I'd prefer to see a backtest of 40 just for confirmation. So if we end up seeing that, understand that that's likely. It's probable to see that. If we don't, then you got away with it as a bull, right? Now, what you wouldn't want to see as a bull and what you would certainly want to see as a bear is 40 gets snapped up, break to the downside. You end up seeing a downside break of 40, whether it holds for a couple of days or backtests and rejects, forms it as, or reclaims it, I suppose, as a resistance and fades hard off that level, heading into earnings, which of course are coming up here on February 15th after market closes, when earnings here are on DraftKings. Psychologically, bulls, listen up, right? You have to understand the psychology of the bears. A downside break of 40 and a hold below 40, you're going to see a lot of bears looking down to, maybe this region here, but really a lot of them are going to be looking to that 50-day down around 36 and a quarter, heading up to 36.50. Just understand that as a bull. And as a bear, understand the psychology of the bulls as well. Okay, now let's finish out here by looking at the option chain, see what the traders are thinking here today. Now, I chuckle because, first of all, keep in mind, take this with a grain of salt. The sample size here is only 78,138 total contracts traded today. That's not a lot. That can be thrown off by 1 or 2 big traders, but even though we're taking it with a grain of salt, we still need to look at the data. Look at this. 58,778 total calls today. 19,357 puts. That is 75% calls today. Okay, that, here on DraftKings, I don't even want to look at the delta ranges to give us a sentiment of short-term speculation. The sample size is so small, but I'll give it to you anyway. In that 0 to 20 short-term speculation, gambly style, short-dated sentiment delta range, 0 to 20. 6,668 calls, 9,054 puts. So it's leaning a little bit bearish, okay, in that very short-term speculation section, the delta range of 0 to 20. But I can't even take that. I have to just take that with a massive grain of salt. The volume is so low. If you saw someone come in and buy 7,000 puts, all of a sudden it throws everything off. It's not a good psychological sample size. It's not great data. But the overall call put ratio, while still not great, still taking it with a pretty big grain of salt, it's a bigger sample size, compared to the delta range of 0 to 20. And it's massively leaning to the bullish side. But understand, as always in the market here, The masses can be wrong. So take this as one of many factors of why your thesis is what it is, and come to your own conclusion looking at all of the factors. Hope you guys enjoy these videos. Hope to see you subscribe to the channel, and I'll see you in the next one.